All right. Hey, everyone. Thank you guys again for having me. I love doing these. My name's Alaina. I'm from Investing Day. We're on like all the social medias and things. I predominantly am a day trader. I do get into swing trading occasionally. But tonight I want to definitely go over the Fibonacci. I really want to focus on that because that's something I use every single day. So let's go ahead and get into it. Let's see. So I'm looking at the SPY right now. This is a daily chart, so one candle every single day. And this is a really, really big time frame. So the moves that happen up here, they do take some time to develop, right? So if you're more of a day trader, you definitely want to focus on lower time frames. I'm actually going to zoom out because I want to talk about this first. But one of the things that we always teach our students is the different types of trends in the market. So you have your primary trend. So like that's when you zoom out on the really long time frame. You can kind of see the primary trend of that stock over time. So if you look at S&P, the SPY, I'm sorry, you can see the primary trend is actually up. Even though we've had a pullback this year, the primary trend is to the upside. And those tend to last longer. Then you have your secondary trends. And so those can last, those are typically like your corrections, your pullbacks, things like that. But those are anything that go against the primary trend, right? So we have a secondary trend here. And then your minor trends, those are going to be like your little fluctuations. So you'll jump down to like smaller time frames, like this is a 15-minute. But you can see there's different directions all through the time frames. So the first thing you want to do, like when you're trading, is really decide what kind of trade you're looking for. If it's more of a day trade, you can kind of take action on the here and now. If it's a swing trade or something more long-term, you absolutely want to give it time to develop and you want to wait on confirmation on these longer time frames. So those are things you definitely want to plan for. So what I like to do whenever I'm using my fib, I'm going to go ahead and draw it out for you guys. And we're just going to use this move that we're looking at right now on the S&P. So this is a 15-minute chart. And so when you're day trading, scalping, we're looking at minor trends, right? So the things we're focused on are the minor trends happening right now in the moment. You don't want to be on those really high time frames trying to trade something that's happening on the shorter time frame because your indicators will also change. So on TradingView, this is my preferred charting platform, but there are some other really good ones. I like Thinkorswim. Webull has really good charts. Anything but Robinhood, right? No shade to Robinhood, but their charts are just they're not good. And I think they're really a little laggy too. So on TradingView, if you're looking for the fib tool, it's the third one down, fib retracement. And so what I like to do is you're going to look for 2 points on your chart. You need a high and a low. And the term for that is just swing high, swing low. So here we're just going to go from the high where we hit this afternoon. Let's see. And I'm looking up here. It's like 398, 58, 53, 56. So we'll go from this guy, the tallest one. And this is basically in preparation for tomorrow, right? Because this has already happened, but we need some levels to work off of for tomorrow. So I'm going to flip this. And so what the Fibonacci numbers are, if you look over here, you can see them. And I'll actually pull this up too, so you can see the ones that are checked, right? These are actually coordinates, like they're based on the Fibonacci numbers. There's like this crazy mathematical equation. You don't have to do any of that math. It's already on your chart. If you're in Thinkorswim, the Fibonacci will be in your drawing tools. And I believe it's like a $ with a line under it. That's the fib tool over there. So nonetheless, what the fib tells us essentially is that our price, it's going to work its way up these levels, right? And so this is for like day trading, right? A 15-minute, that's just today. So we're actually setting up for tomorrow to see where this could go tomorrow. But what the fib can kind of tell us is a couple things, right? So this is our high point. So that's 100%, right? This is the 100% high of this move. And that's the low. And just remember, you can actually fib from any high and low, right? So if we're on a daily, a 4-hour, doesn't matter. Just know it's going to take that move longer to happen because we're on a wider time frame. So another thing to look at on the fib is this 61.8. This is called the golden ratio. And so typically what you'll see is from the bottom, your stocks will fight to move up and reclaim that. And then from the top on the reversal, your stocks are going to fight to come down and reclaim that. So this is kind of this gives us an idea of whether or not it's an actual pullback or if it's a full-on trend reversal. So I'm going to jump down to a lower time frame. Let's look at a 3-minute so we can get some more candles going. But if you just notice from today, right? If you just notice from today, from the low, this is pre-market, we actually worked our way up all these levels. And so another thing I like to look at is the overall direction, right? So if you look at today, this is a nice trending day. And I guess I'll back up and talk about that too. So if you zoom out on a 15-minute, you guys can kind of see how this is a little choppy down here, right? We're kind of trading in this range, and we have been for a couple of days. So it's like working its way up and down this range here. So there are 4 stages of the market. So you have like the accumulation phase. That's when you really get those choppy days, but that's a stage 1. It's also called basing. But that's when you see a lot of shares get accumulated, right? We're totally moving sideways, really, really choppy, like right in here. If you're also looking at your stage 2, that'll take you into your uptrend. So we go from stage 1, stage 2 is our uptrend. And then once you get to the top, it's called distribution, right? So distribution, it's more consolidation, more sideways price action. And then you get into that stage 4, which is a downtrend again. And then you go back to stage 1, right? So there's 4 stages. It's like the market cycle. So that's another thing I like to look for. Days like this, when you can kind of see on the higher time frames, it's really choppy. I really like to avoid trying to day trade because what happens is you get moves that are super volatile. Like it's just really like, the buyers and sellers are fighting all day long. You really don't have anything clean to take advantage of. Like you can scalp for a few ticks here and there, but it's just going to eat up your premium, especially if you're not really, really quick on your executions. I just avoid choppy days like this. Once you get out of the range, like up here, you can kind of see we started to break a little higher. This is a better environment for day trading, I think, especially when you're starting out. But I said all that to say this. Today was a nice trend day, right? It wasn't choppy. We actually trended up all day long. So that being said, again, this has already happened. So tomorrow, right, when market opens from tomorrow, what I'll do is I'll adjust my high, like if we made a move higher, and then I'll just use the same fib. Another thing that's really important to pay attention to, especially when you're day trading on your fib or whatever, is there's an indicator, called average true range. That tells you how many points on average your stock moves a day, and that can be in either direction. And so I'll show you real quick on FinViz how you can find the ATR. I'm just going to pull up the ATR for SPY. Okay, so this is 6 points. I don't like that number, but here's 6.66 points. So on average, the SPY moves 6.66 points in either direction, and this will update and things like that. Of course, there are days where we move beyond that, but when you're using this for day trading, your high and your low, it has to make sense, right? So you don't want to go and draw like a 20, 30 point high and low difference because we're probably not going to make a move like that in one day. I hope that makes sense. If anyone has questions, let me know. But things like, Tesla, of course, Tesla moves way more. Well, not now, it's split, but Tesla's a lot more volatile. So it can make bigger moves. A lot of those big things have actually split, but even SPX, right? SPX is the 10X of SPY. So just make sure that your fib, your highs and lows make sense for the price action that we're actually dealing with. Something like a Pfizer, which I don't know if people even trade options on Pfizer because it doesn't move very much. It has an ATR below 1. Things like that I typically won't even day trade just because they don't make enough movement to make any money on options. So anyways, back to the fib. Here you can see we kind of got our high, right? We had some trouble up here, pulled back. Another indicator I really like to have on my chart is this 50. The EMA 50 is really cool. It's kind of like my compass. So typically what will happen is when you're trading above the EMA 50, we're typically in an uptrend. When we get below the EMA 50, we're typically in a downtrend. And so it's a really nice way to kind of eyeball your direction. So just looking at today, right, we made a really pretty move to the upside. And again, as day traders, especially, I'm more of a scalper. Like a day trader might buy in here and route all this up, but like a scalper, we're only taking a couple ticks each direction, right? We're not riding out these reversals and things, but even still, you can see all these bounces off the 50 where the buyers stepped back in to defend the price. So there were a lot of clean moves today. So just looking at where we're at now, and I'll even jump back up to 15 real quick. Looking at where SPY is at now, it actually looks like even though this RSI is a little overheated for tomorrow, it actually looks like it's forming a bullish pennant, right? This is a continuation pattern. but it does look like it wants to retest this high tomorrow. And that would take us back to 398.58. If you notice in these percentages, all they mean is basically like if this is our high and the price falls down to the 50%, we've retraced half of the move, right? We've moved back and just retraced half of the move from here to here. That's all it is. I know a lot of people get confused on like the percentages, but what's really important is actually in the parentheses, it's the price level. I use these price levels as my take profits. So like, again, I'll go back down to the lower time frame. As you see on here, right, we worked our way up. So let's say we bounce again, your buyer step back in. So now from here, my first price target to the upside is here. Let's say you miss this move and you see a little pullback, then here's a re-entry and you can kind of ride the elevator up, right? You're just taking these bounces and you've got clean price targets on where the price is going to go next. How do you find the ATR again? Oh, okay. It's up right up here on Finviz. I like to look at it on here because it's really quick. But you can see like SPY, it's like 6. If you look at like a Tesla's is probably adjusted now, 12. And if we look at like a Pfizer moves like pancakes are up, it's 1, right? Even a Ford, like Ford doesn't move, it's 0.53. Right. So anytime you're trading options, you're really focused on the delta. That's how we make our money. So like we need something that moves at least 1 point. If it doesn't, then we're just kind of burning up premium. So just keep that in mind. Just because something has options doesn't mean they're all a good idea. So on this fib, and I'm going to look at a couple other setups with you guys too, but the first price target from here again would be back to this 398 level, this high from today. And then if we break that, I actually have an extension as well, right? So if we do break higher, this would be my extension here. How far out do you go with options? Do you mean like expiration dates? Oh yeah, so it just depends on what I'm doing. I am predominantly a scalper, so I don't tend to buy a lot of time. But what I will say is like, it's never a bad idea to buy more time. When I swing trade, I like to buy more time, even if I don't plan on being there. I have a rule of thumb, really, I like to get in and out in like half the time. So if you're buying something that's 2 weeks out, definitely want to like figure it out in the first week and get out of there, because your time decay kind of ramps up around halfway through. But I do trade like, you know, same day, same week expirations. It's just high risk. It's really high risk, and you really want to train yourself if you're day trading to take profit. This market is super volatile. There's so much news coming out all the time. And like riding out reversals, even if you just had like, you know, a same day contract and you rode something out like this, it's going to eat into your premium crazy. So that's just not something I like to get into. But I do use trailing stops. That's my preferred stop loss. I won't trade without it. And trailing stops are cool because, you know, you have your traditional stop losses that will like just totally kick you out and trigger either a market or a limit order. But the trailing stop, it kind of follows the trend. And so it won't let it reverse against you. And I use percentages. So like I like to set a 5% trailing stop. So if I reverse 5% or more, it'll go ahead and trigger my stop and it'll just protect me from my downside. But yeah, by the time, even if you don't need it, it's just, it's better off. It's so much better off, especially on these choppy days. Let's take a look at let's look at the Qs. Yeah, I tend to take larger positions, and like 10% can really be gnarly. But that really depends on your position size, because think about it like this, like if you buy $100 contract, a 10% trailing stop or a 10% stop loss, that's $10, right? That's not going to devastate you. But like if you're taking, you know, $10,000 position, it's just like 10% is a lot, you know, it's kind of a lot. So that's kind of how I look at it. I'm going to do a fib on, let's do a move in the past. Here's a really pretty retracement. Do you guys see how we hit this high, then we came down and then we retraced? I want to fib this out. Yeah, it's just not worth it. And I tell my students this too, when you're day trading or scalping and it's a short-term position, and this is going to sound so harsh, but to let your position completely bleed out for just a few minutes of a trade, it's not worth it, because what you have the ability to do is reposition, right? So if we can reposition, then we can, you know, protect our downside and let's say you have a 5 or 10% stop loss, then it's easy to trade, get it the direction right. It's easy to make 5 or 10%. But if you're talking about taking 100% losses on a day trade, then you have that pressure to recover a whole 100% of your position. And that's it's not necessary. So just keep that in mind. Get really comfortable cutting your losses on your short-term positions, especially even on your long terms, because you can always reposition. Like, you're in control of your money for sure. Let's go down. Okay, so I fibbed from August 31st on the QQQ, and then I came down. Here's a nice double bottom for my candlestick pattern people. We bottomed out, it looks like around 292.95. And I'm gonna open up my candle so we have a couple more to look at. I really like this move here. All right, so here we go. So this is a little choppy, but nonetheless, I'm going to actually talk about my moving averages too. So just keep in mind, the 50 is always going to be my white one. I always make it thicker so it jumps off my chart at me because it's like my compass again. The 200, this is important too, right? So just remember, when the 50 crosses below that 200, that's called a death cross, and that signals a downtrend. When it crosses above over here, that's a golden cross, right? So this signals a strong uptrend. Another thing you want to pay attention to is the relationship between the 50 and 200. So here there's a death cross, and you can kind of see the 50 kind of curled like it wanted to cross back up, right? It's still super choppy. So the downtrend, yes, we got our death cross, but these lines, they're not diverging from one another. So like you see over here, when we had this big sell-off, and even here, right, if you open it up, you can see how the 50 moved away from the 200. That's a stronger sell-off. So when they're kind of hugging each other and they don't really look like they're moving away, just keep that in mind, right? And so over here, again, they still kind of moved close to each other when the buyers tried to fight back, but we did stay in that death cross. But nonetheless, just looking at the fib levels here, from the top here, our first level down, boom, 303.55. You had your buyers fighting for their lives up here, but we ultimately got pushed down to the next level. And then here's our golden ratio, right? There's our golden ratio. And again, typically you'll see a fight around here because like they're fighting for direction, right? The bulls, they want to move up. They want that 50 into the golden cross. They're going to fight to get there. So one thing that you can kind of eyeball too in your downtrend is you can see when the bulls push, they're always pushing towards the 50. So when you get rejected, you can actually take positions to the downside off those rejections. Same for the upside, right? The bears, they don't want this, right? So whenever you approach the 50, right, here again, the bulls are fighting for the 50, bears are slapping it down. They're fighting again, it's getting slapped down. Over here, they got it up over the 50, and then look how these start to curl together, right? They start converging. There's the fight again, right below the 200, and then there's our golden cross, and that's confirmation that we're headed to the upside. And so when you're looking at a fib, you just want to remember the overall direction of your trend, right? So in this case, we're going down, but your entry, you want your entry to be you want high probability, right? So from your fib levels, let's say here, right, there's a sell-off. Let's say we didn't catch that. We broke the 200. Bulls came back in. On this rejection, we have a price target, right, off the 50 there. And sometimes you can add other EMAs, like tighter ones. But just for today's purposes, I just want you guys to be able to like visualize what's happening. But yeah, you can see there's a rejection on the fib level. There's our first price target. We cracked the 200, the 50 is coming around the corner. And also you can check your MACD RSI. These guys look all good too. So there's a quick trade to the downside. That's a quick day trade there. And I really like that setup. Over here, you can see they came back, bulls came back, defended this level. They got it up over the 50, but they got rejected at the 200. And this is really choppy. Like this is like a fight all the way down. Like this is totally a fight all the way down. This is one of those sideways days that I don't really care for. But again, if you're quick on execution, you can scalp for just a couple ticks. I think it's important because I know, especially when you're trading, it's fun. For me anyway, I think it's really fun. I'm sure a lot of you guys feel that way too. And so especially early on, it's like you just want to trade because you enjoy it. Like it's just fun for you. But I think it's really important to learn when to trade and when to not trade. I really like to be super picky about my setups. I just don't, I don't wake up every day looking for a trade. Like I'll check the market periodically. And if I see a setup that I like or something that's developing, then I'll go in and watch and take action on it. But days like this where it's just crazy chop, even like I think earlier today was super choppy. Yeah, like it's just not worth it. Like this is super choppy. This was pretty out of open, but I don't tend to trade open. I don't like jumping in at 9:30 on anything. So just keep that in mind. I guess that's risk management. Let's just keep that in mind. It's really not worth it to take setups that are not totally A1. So yeah, once you identify your direction, the next thing you want to look for again is these opportunities. So if we're trending down, right? If we know overall we're trending down, what we want to do is we want to scalp to the downside. So what we can do is like wait on these rejections again, and then we sell the pops, right? So we rally, we sell the rally every time to the downside when we're in an overall downtrend. On the upside, we buy the dip. And I know you guys hear that a lot, but it's literal. We literally buy the dip. So if we're trending up, right, we're in a golden cross, nice trend up day. And this is actually after hours in pre-market. But nonetheless, you can see here, there's a pullback on the reversal. We did have that double bottom there. I know it's hard to see on the 5-minute. That's why I had it on the 15 at first, just because it's more defined. See how defined that is there. And that's another thing. I like to zoom out to look at my candlestick patterns because a lot of times when you're on these lower time frames, they can be kind of hard to just eyeball. So I definitely will jump up to a 15, a 30, draw out trend lines, things like that, just so I can see what I'm working with. But we did get that nice double bottom. So here's the pop, right? We broke out of the neckline there, got over the 50, and then there's a rejection. So this is our first level up on the fib. And again, we're doing this retracement from the prior day, right? So this has happened already. Let's say we're live trading in the market. None of this has happened yet, but we got a double bottom. So from the double bottom, the first price target from that low is here. And then the second one is here. And you can really see how it pulls back really nicely. And you can catch those pops on the upside. But it's just all about patience. It's all about patience. Like even if you jump in here, like a lot of times people will, see a pattern form and they'll jump in right at the neckline, and that's fine. You want to have a tight stop. But for upside, my confirmation, it's totally above the 50. Like I want to see the whole candle open and close above the 50. That just gives me peace of mind. We're on these lower time frames, so these candles, they come at us quick. We don't have to wait an hour for a candle. It's literally happening in real time. Use Fibonacci candlestick pattern. Yes, I do. Yes, I do. I use candlestick patterns. I use regular candles as well for gaps and things, because you can't see gaps on Fibonacci, of course. Like there's a nice gap that got filled. Well, that got filled pre-market, but nonetheless, you can't see gaps on Fibonacci. So I will switch them when I'm looking for gaps, especially pre-market. I trade the SPY and SPX predominantly, and they pretty much have gaps, not every day, but a lot of times there'll be a gap pre-market. But yeah, I think Fibonacci's are a lot easier to see candlestick patterns for sure. And let's actually look. Oh no, I absolutely draw price levels. Absolutely. So you'll have levels. Let's just start from the top. But yeah, I draw price levels. My personal chart, I actually don't even teach off of it because there's so many price levels drawn on there. But yeah, so let's see. And actually, we don't need to go all the way up to the daily. Let's just do a 15. Let's draw our levels on the 15 because you will have price levels, technical levels and psychological price levels on different time frames. So we're going to focus on the 15 and then we'll work our way down. Let me get my magnet back on here. There we go. So yeah, whenever you're looking for your levels, support and resistance, just, I don't know where everyone's at here, but just know resistance is the ceiling. Like where does my price rise before it reverses? And then support is the floor. So where does my price drop to before it bounces, right? And so this is another reason that I think it's so cool to trade like the same things. This is why I trade SPY and the SPX, because I know where my levels are, right? I don't have to guess. I don't have to like zoom in and out all day, like I'm kind of familiar with how it behaves. And so what I'm looking for here is places where this thing has bounced, and you just want to look for like large groups of candles. And I have this little magnet tool on, and it just snaps to the candle. It makes life a lot easier. And I'm just putting a couple levels on here, but again, the more the merrier, because I like to use these. It's cool to know where you could potentially bump your head and reverse, right? This also helps you when you're making out your trading plan, right? You never want to take a position without actually having a plan, because it's all bad. You want to be able to gauge if it was successful. And if you don't have like a take profit percentage in mind, if you don't have any type of stop loss plan in mind, things can go left really fast when your emotions start to set in. Am I more confident with your price levels or fib? I mean, I use them both, honestly. Like my personal chart, it literally has probably, I don't even know. There's so many lines on there. But that's just because like you want to know where you could potentially bump your head. So like, let's just look at this, right? We have this, like, this is the cues. This looks like a continuation as well. Looks like it wants to break out of this pennant here. So I know my first target is here, right? This is my first price target. But if we get up here and we get some volume into push, I immediately know I have another price target that's not far off, right? So that's here. And then from here, I go here, and this is right along the sides of my fib level too. And if we break here, then we go here. So it's kind of like, it just gives you extra opportunities to take profit, right? It's more like a roadmap. Like you're literally drawing yourself a roadmap. I wouldn't say necessarily that's not always the case, but you know that you could potentially get bought up to this point and start selling off, right? Because we know that it rejected here previously. So I just think it's important to have a price target, because again, when you get in a trade and if you're trading with stops, like hopefully a trailing stop, but if we get up here and we push, then your trailing stop's going to trend with you anyway. If we get up here and reject, then you don't have to worry about it, totally selling off in your face. That's why the trailing is so important. Or any type of stop, really. I like trailing, but like a stop limit, stop loss is fine too. But this just helps me. I like to, like, again, with my trading plans, I'll always have a price target in mind. And then again, if you take your profit, like let's say we get bought up to this and we do continue up to here, because this RSI is a little spicy, right? It's already hot on the 15. So we could buy up potentially here, but it's a little extended. Let's say that happens, then we can take profit here. There's a pullback, and then let's say the buyers come back in, then we can take a second trade and work our way up. So we're maximizing our profit, but we're minimizing our risk. Does that make sense? It just depends. If you're doing like shares, then you can do it on that. But if you're doing I do options. So yeah, my trailing goes on those, and it goes based on the premium. Trailing stop will base on the premium. And then you have two kinds too. You have a trailing stop, and then you have a trailing stop limit. So like the trailing stop, that'll trigger a market order. If you're trading something like the S&P, then those are fine, because a lot of times, SPY, super liquid for the most part compared to everything else. SPX, not as liquid as SPY, but the liquidity is pretty okay over there too. But whenever you're buying options, you have that bid and ask spread. And so when you're trading, you want the spread to be really tight if you're going to do a market order. I think someone was asking earlier about like same day expirations and things. A lot of times those are super liquid, but like when you get really close to your expiration, they jump around a lot. So you can get like a market order that executes and it goes in at a wild price. So that's something you want to pay attention to. I haven't personally, I think I've had like maybe 1 or 2 days where SPX options chain was a little wonky, but for the most part, it's pretty smooth. I haven't had issues getting in or out. Same with SPY, like the spreads on SPY are typically like a penny apart. But you have other things that have really wide spreads. And so like if you're doing a trailing stop order, like a market, you can get executed at a weird price if the spread's really, really wide. But I really like to just trade things that have high volume anyway. But that's one of those things you want to look at before you jump into an option position. And use your, like literally use your levels, to help you identify good strike prices. You want to look at like your open interest, things like that. But I'll show you guys this too, like on bar chart. Is anybody familiar with bar chart? I'm just going to pull up SPY. As you practice your fib, like I'm sure you guys have heard about the fib all day today and the Elliott waves, but one thing that I did when I was learning the fib is I practiced identifying price levels with these expiration dates. And like, you can kind of see, I just typed in SPY up top, and then this on Finviz, or not Finviz, bar chart, it'll give you calls and puts, right? So you can actually go in and you can see the open interest on the options chain, and then go back to your fib and like compare your price target to where people are holding their positions. And it's actually mind blowing. But you can even like change the expiration, like push it out. I mean, it goes on, but like you can literally see like, okay, I think it's going to hit, $3.99. And then you come here and you see all this open interest from, $3.98 to $400. So it can help you identify if you're in the ballpark, right? And so if you're fibbing on a longer time frame, it's going to take longer for the move to happen. So you got to push out the expiration over here. But I think that's really cool. Another thing you can do, they do have a trader's cheat sheet. And I believe this is based on like the daily, but it'll also give you fib levels over here. Okay, there we go. 52-week high. So that's from the 52-week high on SPY. And there's the price level at the 38.2 retracement. So now everybody's familiar with what that actually means. Open interest is important to be high volume. So open interest and volume, like basically open interest are how many active open positions there are. And then volume is how many are actually being traded, like how many were traded in that trading period. So they're both important. Volume, like again, you just want to have liquidity. Like you want to make sure that it's actually something that's being traded. You can open up an options chain on some things and like there's no trading volume, like people don't even care to trade it. Sorry, my dog's barking. Same with open interest, right? You don't want to be the only person holding a position. I don't know why she's barking, but you don't want to be the only person there. I think of it as a party, right? Open interest, you don't want to be the only person at the party. If there's, 16,000 people there, it's not a bad idea. So just keep that in mind. And then at the bottom of this, you can also check your work here. There's put volume, call volume, put open interest, and call open interest. You can kind of see where the scales are. All right, let's do Boeing. I know Boeing is so random, but this is one of those things that I actually learned the fib on because it's very, let's go to the daily real quick. I don't know what's up with this dog. Over 10 contracts. Oh yeah, I had a position today in SPX that was 25 contracts. But that's one of those things you want to scale. You definitely want to scale. You don't want to go big or go home. Like I'm really big on risk management and conserving capital. So you don't want to go huge. One of the biggest losses I ever took was on NVIDIA. It was $28,000 loss. And it was like, it was traumatic. Like it was very hard to bounce back from that mentally. And it was because I tried to go really big before I was prepared to. So I say scale, I only say trade with 10% of your portfolio. And then as your portfolio grows, that 10% will grow too. And that way you're not over leveraged, things like that. So. Okay, so I want to point out on BA, if you notice, and this is after the pandemic, so just think about the pattern that we're seeing here. Do you guys see how this is kind of breaking out of these flags over and over and over? So it kind of broke from pattern, but back when I was learning the fib, this was like easy money. Like this was easy money because we were just working our way up and down the fib, making new highs, and then it all went downhill, right? So now it's a different situation over here. Yes, I actually posted my trade from today online. It's on my Twitter. And I don't necessarily not teach children. I have a 14-year-old in my community, but it is like family friendly and stuff, but no, I haven't specifically taught children. But I hope I answered the question about open interest and high volume. I like to trade, I just like to trade the S&P. That's a personal preference, but as long as there's liquidity, you can really trade anything. As long as it moves, you just need momentum and volume. That's really the biggest thing. And Boeing looks like it's got a little head and shoulders action going on here. Let's see. I'm going to go ahead and fib out BA from, we'll just go from this low here. I'm not crazy about this chart. Actually, I'm going to leave this where it's at. And then we're going to jump back down to a 15. So I just went from this high to this low, because again, you guys see where, does anyone remember what stage this would be in? What stage of the market? I know we talked about it a while back. Oh, thanks, David. Yeah, the S&P is amazing because it is, okay, yeah, the stages, this would be distribution. This will be distribution. Good job. So what comes after distribution? Downtrend. And what comes after head and shoulders? Downtrend. So where BA is sitting now, and this is kind of small. Let's zoom in, shall we? You can see it's fighting on the 50, right? The bulls are really fighting hard to defend this like 150, 46 level. This is crazy. I really thought BA would have been recovered by now from COVID, but it's actually going the wrong way. But if we break this low here, then we have an extension on our fib. And I just wanted to point that out because you can you can flip it, right? Once you hit that low, then you're working your way down. So from here, our next price target on BA would take us to this extension, which would be this 145.45. See our hundreds on the bottom now because we're sitting at the low and we want to work our way up, but until we have confirmation, we can actually trade off this. And then we flip and go the other way, reverse. Now we go back up. And let me just go down to a lower time frame so you guys can see this a little clearer too. All right, so BA down here, there's our death cross, super choppy. BA is for the scalpers. It really is truly for the scalpers. But if I look at this, again, it's kind of range bound here, but you can see it's having trouble up here. There's a volume spike at close, but look at your RSI here. It's hot and your MACD is weakening as well. And so from here, if we do reject, which we have a trend line here that we want to respect too, right? Don't want to jump the gun here. A nice little wedge action. But then we want to break this wedge and potentially come down and retest that low. So this could be a nice setup on BA. This could be a nice setup on BA. But again, from the flip side, what you want to look for on the reversal again is some kind of like pattern or confirmation that it's truly in a reversal. And so sometimes I can click around and look at different time frames, see what I see here. But on this lower time frame, it's like ranging. So like we're at the upper end of this range, right? It's starting to look a little weak. This is crazy. This RSI was 86. So pullback is totally not, like it needs to crack this trend line, of course, but I would like to see this pull back a little. But this is on a 5 minute. If we do bounce here, there's our first target. But again, this would take some time. This would take some time because it does need to cool off a bit. Let's see. Let's look at Tesla because Tesla does not follow the rules ever. Tesla's super choppy. Yeah, there's a lot of things that I've seen today that are like really fighting on top of that 50. I think CPI next week is going to kind of make or break us. I really do. So for this, I'm just going to take it down. I'm going to take it down here. And again, I'm fibbing on a daily. So remember, this is a big move, right? This is going from this high is what, 314.67 all the way down to 265. So this is a huge move. I mean, it's not huge, but this is a significant move. So I wouldn't expect this to retrace the whole thing in one day. If I wanted to like day trade this, I need to take it down a notch, right? I need to go down to like a 5. I like to fib on a 15 just because I can see more of the candles. But you could even do from yesterday's low to today, or even today's low to today's high into tomorrow. Tesla is one of those things where like if you actually trade it, you can get away with going a couple of days out, but you still don't want to go ridiculous. But most of the things I've seen that we've looked at even in here, they have this continuation. This bullish pennant is a continuation pattern. I think a lot of things want to move a little higher. But again, we are way extended. So just keep that in mind. But for Tesla, it looks like it wants to go for this 286 level. Even though this is super hot, this is kind of like scalper's paradise because we are extended to the upside, but we can, if we get some volume in here and they really push it, we can actually see a move. So yeah, does anyone have any questions? I know I talk a little quick, but you guys seem to have, let's see, I think I answered all the questions. Oh yeah, I do like Elon though. I definitely like Elon. And I love charts. I look at charts all day long. I'm going to show you, I'll even show you my actual chart so you can see what I mean about, I just don't like to teach on it because I know it's like overwhelming and I don't know everybody's like level and stuff. So it's like, I don't want to like scare people out of the stock market with my chart. And it's also purple. So I don't want people to be like, what's this? But I'll show it to you. Let's see. I have like 20 chart loadouts. It's a little ridiculous. Okay, here we go. So yeah, same energy. It's just purple. But there's SPX. You can kind of see, I fibbed this out earlier today and you see all the price levels. That's why another thing too is like when we get in these like psychological price levels, I'm always like you see all this potential support and resistance around here. That tells me like, okay, this is going to be choppy. Like I already know it's going to be choppy because there's so many rejection places around here. And so that's not always the case, right? But there are places like even here, it's super concentrated. We get like super choppy in this area. So I know I can like, when we get in there, I don't play games, right? I just want to get in and get out. Again, if I go to the daily, it's probably, yeah, this is nuts. But I just want you guys to see like, you know, it's okay to have a lot of lines on your chart. It's fine. I have a ton. But I use these as take profit places. Like if we get to one and we kind of wick it and struggle like here, you see how we got above this level, but we're having trouble getting to this one. That tells me like, I need to get out of here. Like, I don't want to ride this out sideways. SPX premium is expensive. And it's like, the last thing I want to do is give it back to the market. And so here, there's a bounce off the 50. And then we cleared this level. We cleared this one. We cleared this one. There's a little struggle and I'm out. And then here we bounce again. So if you want to take a little small trade, boom, boom, there's our price target. It just makes life a lot easier. So it doesn't look very pretty, but as long as you know what's going on, that's all that matters. For my S&P traders, I would definitely recommend throwing the VIX on your chart. It's a cheat code. I love to have the VIX on here. No, they don't disappear. They don't disappear. You can draw your trend lines, your price level lines on any time frame, and they'll be there on the lower time frame. Because like a lot of times you'll have a trend line, like even here, you see how we have this nice trend line on SPX. Okay, let me turn off the magnet. It's like clicking. So here we got a nice trend line here. So I can go down to the 1 minute or the 2 minute and I can see, look where it stopped, right? Look where we closed. So yeah, they do show up, less show up, but that's because we're like hyper zoomed in, like we're super zoomed in. So that's the only reason it looks like that. If I zoom out, they're still there. They're totally still there. And I know like back in January, like we hadn't been, you know, in the 360s for a while. So what I had to actually do was go way down here and start charting out price levels. So that's never a bad idea. Like if you're just starting out with like plotting your chart, you know, go back in time and see what happened the last time you were in this neighborhood. And that way, you know, you don't have to do like a mad dash when we start selling off and figure out where we could stop, right? You already have, you know, what's going on, you know, the historical price action. I also like to look for gaps and things. Like I'll go back in time, I'll look for gaps. I know this year, especially, we filled a ton of gaps, like Facebook, I believe that earnings call they had, they filled a gap from like 2019 to the downside. So just keep that in mind. Like it's, you know, you want to tie all this together. Like I know, I'll go back down. Where's my low? Okay, right around here. So there's another double bottom, it looks like. But for downside, I know that I have this trend line here because we saw it on our 15. So even though, you know, we see this nice uptrend, then we have opportunities here moving into tomorrow, right? So are we going to break this trend line and sell off and come down to our golden? Are we going to bounce off the trend line and move higher? Hopefully, maybe go to the extension. On this lower time frame, this is a 2-minute, but it does look like the RSI is totally flat. It's not really telling us anything. And the MACD, it's in a reversal, but we don't have any confirmation either. And the VIX looks a little flat too. So we'll see what this wants to do. We'll see what this wants to do tomorrow. But again, even on the lower stages, if we move into this distribution and we're just kind of bouncing around here like a ping pong ball, it's just about being patient and waiting on, are we going to break this low here? Are we going to break this high here? This is given like a little almost double top action here. So we'll see. But the fact that we closed right up on the 50 in that trend line, it's literally indecisive. So for my swing traders, this would not be something I would want to swing because I don't have a clear path to victory, right? This can be a double top. Like we're literally closing at the neckline. It doesn't tell me what it wants to do. We're on the trend line. We could bounce here. We could break, can move sideways. I just like to have a plan. I like to have a plan for swings, and for day trading and scalping, just get in and out, just lock in your profit and compound as much as you can. Like that's the name of the game, is compounding. That's really it. Thank you guys for not laughing at my purple. No, I don't like to swing. I do occasionally, but I think this whole year, I think I've had like 4 swing trades this entire year. I'm really more of a scalper. I really like Power E-Trade. I like Thinkorswim. Those are probably my top 2. Robinhood is not it. I do like Charles Schwab. But yeah, anything, I think it's important, especially because scalping is like, it's probably one of the fastest ways to build capital, especially once you really get like discipline. It's really, it can be, I don't want to say it's easy. I don't like to oversimplify this at all, but once you really get your discipline down and you're really consistent at locking in profit, you'll see how quickly you can compound. And so when you're talking about like, large account sizes, you don't want to have your money somewhere where you can't have like a tax advantage. So like you want to have somewhere where you can have like Roth, you can start thinking about retirement, things like that. So when you're on Robinhood, I see people with these crazy amounts all the time. And it's like you're paying capital gains, like short-term capital gains is gnarly. So you want to, do what you can to like ease the pain. It's fun to make a lot of money, but you want to work on keeping it too. So sometimes I'll trade out of my Roth, which I have a couple different accounts, but yeah, just keep that in mind. When loss ratio do you have in scalping? I mean, I would have to calculate it. I actually don't even know. I have a trading journal and I chart not chart, but I write down all my trades. But one thing that I think is like a common misconception is people think I trade every day, and I don't trade every day. I don't trade every single day. I may trade like once a week, maybe twice a week, if that. But I don't think it's necessary. And you'll have a higher win percentage if you don't trade all the time. Like a lot of times people take trades out of impulse and not out of a good setup. And it's just like, you don't want to expose yourself to the market unless it's a high probability setup. But I might look and calculate my win loss because I want to know. I actually don't know. My risk reward. Actually, I don't even know. I know, like, I guess I can just explain what I do. So I have, and this actually recently just went up, but I have to basically take like 15K. Like that's basically like my position size. Like I don't like to go over that. And that's because of NVIDIA. Like I took a 28K loss. And so I just know like mentally, I'm not like, I can't go beyond the 15K. I don't know if it's like a block or what it is. But any position I take, like that's the most capital that I'm willing to risk in it. And I always trade with a 5% stop, like rain or shine. So I don't know. I guess I don't have an answer for the risk reward. I'm sorry. Does that answer your question though, as far as my thought process? I hope it does. I just don't think anyone should trade more than 10% of their account in one position. I know I had a student, she was like asking about trading, protect mine as much. Yeah, for sure. For sure. But I had a student, she had $1,000 account and she asked me if she could trade SPX. And I told her to start on SPY, just build your account with SPY because I don't want you to over leverage. Like SPX is more expensive. So then she came back and said she had taken a $700 loss. And I was like, well, you obviously weren't trading SPY because $700 sounds like SPX. So that was a perfect example to her. And I literally told her what I'm telling you guys, like, just don't over leverage. It's not worth it. It's not worth it because now 10% of a $300 account is 30 bucks. And now it's like, it's really hard to start. As far as like taking profit, I use my price levels, but I look for 30%. I look for 30%. That's typically where I'll exit. And then if there's like, we just had a day where it totally sold off, and that's where your trailing stop comes in. But typically 30% is where I look to exit. I don't really like to stay much longer than that. Sometimes I will, like sometimes we'll have really nice days where we're trending in a direction. But I don't ever go into it looking for a move like that. Every move is not going to be a home run when you're scalping. If you go days without entries and exits, yeah, for sure. For sure. I like to look at the market every day, but like I will never, I don't take an entry every single day. It's just not necessary. Yeah. So again, with like the trailing stops, typically they'll stop me out. Typically they will stop me out. Max entry. I don't really have like a max entry and exit per day. Just on the days that I'm trading, if the setup's there and it looks good, like all my confirmations are there, I'll take the trade. But I'm not like watching all day, every day looking for a trade, if that makes sense. But yeah, I think the most trades I've ever had in one day is like maybe 6 or 7. But that was like when I first started scalping and I was just like trying to catch everything. But I found that it's not necessary to do that. It's totally not necessary. Yeah, the charts totally call the shots 100%. Like if the chart doesn't look good, I'm not taking the trade. I'm not taking the trade. And that means like everything has to be in alignment. I'm curious to see what happens tomorrow because a lot of things look like they want to go higher, but they're all like overheated. So I'm curious to see how that plays out. Do you guys have any other questions? So typically what you'll see is you'll see like there's a lot of volatility at open, and then like it comes back during like the end of the day. But I really mean, like I've seen things happen like all throughout the day, but as far as volume goes, it typically is like first thing in the morning and then into close. You can see it. I mean, you can see it here. So yeah, but again, there's always opportunities like midday, things like that, especially for scalping, because you, like I said, you just need a couple clean candles. It's not like a huge thing. But yeah, power hour 3 to 4 is crazy. No, Heikinashi has wicks. Heikinashi has wicks. Whenever you're reading these, like they basically like your buyers, I think of it as like tug of war. Like your buyers are pushing up from the bottom, your sellers are pushing down from the top. So it's like even here, this is a really bullish candle, but the sellers are still pushing down on it. Like we still have some resistance here, but the buyers are still pushing up on the price. And then you've got your dojis. Well, these are these are gravestones, but they're still there. So yeah, there's a little difference that see, that's 5% on the trade. That's 5% on the trade, 5% trailing stop. I typically like 1 to 2. sometimes 3, depending on the ticker. But like the S&P moves really quick, so a lot can happen in 3. 10%. I don't trade more than 10% of my portfolio. So like 10% of the portfolio will go into the trade. Well, in this case, it's a little over 10%, but 5% stop. Like I don't want to lose more than that. And then sometimes too, like there's like certain days, like I think, what was it, Friday, maybe? When the VIX kind of ran crazy, you'll notice the premiums were a lot more inflated as well. Like the premiums were a lot higher. So like on days like that, I'm not going to take a super crazy position if the premiums are already expensive. Yeah. So like days like that, I'll take smaller sizes, and that's just like risk management. So it's really all about like, I think it's important to have a budget going into your trade. Like how much do I want to put into this? And then a price target, and then a loss plan. So like, when am I getting out? Whether it works out, like what's my stop loss going to be? And then also, where am I going to take profit? Because sometimes you might want to take profit before your stop even gets triggered. Yeah, but that's why we like stop losses. Because like losses are totally inevitable. Like they're gonna happen. But the point is, you want your wins to outweigh them. So it's not like we're constantly bleeding out 10%. Like we have wins too to account for that, if that makes sense. Oh yeah. Do we have any other questions? I know it's about time. We do have a community on Slack. There's actually a link on, we have Instagram, it's at Investing Day, and there's a link in our bio that has the link to join Slack, and that's free. So, and we do like live trading, things like that, so you guys can get more familiar with how we trade and things. So, but that's all I have. Thanks for having me, guys.